Welcome back, everybody. We're now heading into session 3. So I hope you got some notepads and a pen and paper, or if you happen to be in front of your computer, ready for the next one, which is ASX Tech, Australian Stock Exchange, thinking outside the square. With major moves in the region, such as Square's landmark USD 29 billion all-stock acquisition of the ASX-listed financial service provider Afterpay has reignited interest in the ASEAN Tech Sector. Coupled with a flurry of record-smashing IPO activities across C exchanges, suddenly all eyes are fixated on this region. So join us as our panelists swap insights on current market trends and investment patterns while also discussing the strategic benefits of listing at the right time. Our speakers, let me introduce you, is Hamish, CEO and Managing Director of iCar Asia. We've got Ed Clarke, co-founder and Managing Director of Yojee, Cecily Conroy, partner and head of ECM Australia, KPMG, and Sasha, Conoplia, moderator for Business Development Manager Listings, ASX. Please welcome to the screen.
Thanks very much, Lenora, and good morning, good afternoon, or good evening from wherever you are, and thanks for joining us for the ASX Tech Thinking Outside the Square panel. I am Sasha Conoplia, ASX Listings Business Development Manager based in Sydney, Australia, and moderator for the session. If time allows, we'll take some Q&A, so feel free to ask via the Q&A tab in Hublot. I'm joined by a great panel today, as just introduced, with Cecily, Hamish and Ed. So welcome everybody. Hamish and Ed, tell us a bit more about yourselves, about your companies. Briefly explain what your company does, when it was established and when it was listed. Hamish, I'll throw to you.
Great, thanks Sasha, and hi everybody. Great to be here at Wild Digital. I've been part of iCar since 2016. Prior to that, I worked for eBay for 10 years across a variety of markets in Sydney, London and Amsterdam. I was very excited to come to Southeast Asia in such a dynamic environment to work for iCar. iCar was established in 2012, and actually soon after it was established, listed on the ASX. And I did that listing as part of the process to raise capital in order to do the first acquisitions that we would make to start building our company.
Fantastic. And I'll throw to you, Ed.
Thanks, Sasha. Yeah, look, Yojee is a 6-year-old company. We actually listed in 2016, so quite a young listing, quite a different route to say the traditional IPO route, but Yojee is in supply chain and logistics technology. We now work with 4 of the top 10 biggest logistics companies in the world, providing software for land transport across right now Asia Pacific, although recently we announced some expansions into Europe. So exciting software for getting things done during COVID has been a big growth space for us, and we're focusing on that big bulk movement place and e-commerce as well.
Fantastic. And Cecily, tell us more about the equity capital markets advisory function at KPMG. I guess the types of transactions or sectors you get involved in and how you work with your clients.
Thanks, Sasha, and good morning, everyone. So my name's Cecily Conroy. I'm a partner at KPMG, and I head our equity capital markets practice in Australia. So we advise founder-led financial sponsor and corporate clients on equity capital market transactions, such as IPOs, pre-IPO placements. And we also work closely with listed companies when they're looking to raise equity or engaging with the investment community. We work across all sectors and particularly active in the tech space. For IPOs, our role as IPO advisor is distinct from that of investment banks. We don't replace the role of the investment bank, but rather we bring this specialist ECM knowledge to a company's internal deal team. So we work alongside management from an early stage and provide independent advice on all aspects of an IPO process, so from pre-feasibility assessment and deal structuring, right through to appointing your investment banks, deal execution, marketing, and ultimately those decisions around pricing and allocation. Back to you, Sasha.
Fantastic. Thanks, Cecily, and great to see you at a recent listing ceremony back live down here at Exchange Square. So today's session is called ASX Tech, Thinking Outside the Square. This is in clear reference to Square's US$29 billion all-stock acquisition of the ASX listed buy now, pay later market darling Afterpay. Afterpay IPO'd on the ASX just over 5 years ago in 2016, raising just 25 mil with an initial market cap of just 165 mil. Now, subject to approvals and completions, obviously that's all in train at the moment with Square shareholders approving last week. Afterpay due to vote on the 6th of December. But if that all comes to fruition, then Square is due to list on the ASX in early 2022, in early January, in fact. So endorsing the growth and maturity of the Australian tech sector. So Cecily, just start with, what are your thoughts on that transaction, the Afterpay Square deal? And from an ECM advisory perspective, what do you think this deal means for the global attractiveness, I guess, of the ASX tech sector?
So the Afterpay Square deal is a landmark transaction. It is evidence of the strength of the Australian technology sector as a whole. And we expect that this will lead to increased interest from international investors and tech companies in our market. In terms of what it means for the attractiveness of the ASX tech sector, there's two elements that make this transaction exciting. The first is Square's decision to establish a secondary listing here on ASX, as you mentioned, and it being such a strong endorsement for the listed tech sector here in Australia. We expect that this would increase the institutional investor interest in ASX tech stocks and have a positive impact on trading activity. Since the announcement, we have seen the ASX All Tech Index continue to rally. And of course, the global media coverage that this transaction has attracted will lead to more domestic and international tech companies choosing ASX as a listing venue. The second thing is to look back at Afterpay's journey, and it's a fantastic example of how the ASX provides a platform for emerging growth companies to reach investors who genuinely understand tech and how to value tech companies. As Sasha mentioned, Afterpay listed in 2016, raising $25 million. So, think about that for a moment. But importantly, public market investors here in Australia continue to support Afterpay and bought into their growth story. The company came to market multiple times to raise equity to execute on its growth plans. So that, with that in mind, from the perspective of emerging tech companies, many will find inspiration in the Afterpay journey and recognise the ASX as a gateway for accessing institutional capital. And for investors, we really think that the deal and the success of Afterpay will only continue to fuel the demand from investors for tech stocks. And this is demonstrated by some of the recent IPO success stories that we've seen for tech companies, including SiteMinder and Step One.
Yeah, fantastic. Ed and Hamish, just throwing to you, what are your perspectives, I guess, on the deal and the opportunities for ASX listed tech market? I'll throw to you, Ed, first.
Yeah, look, I think one thing that people don't maybe understand out of Southeast Asia especially is the size of the equity markets in Australia and the amount of funds and the size of the funds there. Southeast Asia is predominantly for technology VC backed, but in Australia you've got extremely large funds looking for great growth opportunities in the tech space now because of some of these pioneers that have laid out what can happen, and that Australian companies and Australian listed companies can do it too. Also, Asian companies that are on the watch for the Australian markets because of the opportunities and growth there. So I think there's huge opportunities for good companies with strong board and really strong metrics that they're going to go and share with fairly savvy investors. So it's a pretty exciting space to be in. Certainly it's been good for us.
That's great. And Hamish, your thoughts?
Yeah, no, great deal, obviously, and really, really important, I think, for Australian tech companies to put us more on the map in that respect. I think you're seeing that shift also towards the power of some of the fintech startups in Australia start to dominate the ASX tech listings as well. Some great examples aside from Afterpay that sort of followed along from that. Zip, Split, and particularly, I guess, Xero is really interesting to look at, and their journey followed relatively similar to Afterpay, but they started in New Zealand, then came to Australia, used the ASX in order to grow with growth capital and to fund some of their acquisitions. And they're really a fantastic company to watch as they now push out around the rest of the world. So a great platform to use to grow yourself and really put you on the map and be able to do things not just in Australia, but around the full world that you can tap into.
Yeah, fantastic. Let's now just have a chat about why you should look to IPO or list on ASX. So it's worth looking back over the last 12 months at IPO activity in the tech sector across Southeast Asian and the ASX exchange. So looking at the Dealogic numbers in the last 12 months to September 2021, ASX has listed 32 tech sector companies worth $2.5 billion US. This is actually twice the number by listings and greater by value in total than all of the Southeast Asian exchanges combined. ASX has also done more by value and number than the LSE AIM market. And looking more broadly over the last 5 years by number, ASX is ranked number 4 globally in tech IPOs. So Ed, you mentioned it's been about 6 years since Yojee listed on ASX. Tell us why you chose ASX as your home exchange, even though your business is rapidly expanding across Southeast Asia. And what does being listed on the ASX, I guess, bring to your business?
I mean, I think one of the things that surprises a lot of people when a lot of founders will come and speak to me and sort of they'll assume we're head office in Australia because we're listed on the ASX, and that's certainly not the case. Our head office is Singapore, and our probably 2 next biggest offices are Malaysia and Vietnam. So we chose the Australian market because it is quite savvy in the tech space and is quite hungry to find good technology investment. There's some really good funds there that will partner with you in a similar way to VCs, not quite to the extent of hands-on, but they'll do a big length of the journey. And I think that's a really important part of growing a technology business, is you've got investors that can do a couple of rounds with you and help you get through multiple stages and finding those groups that are sticky and will keep growing with you. So on the investment side and fund side, obviously it's really important to have those type of investors, and they are great. But more importantly, I think as a growing business company that's working with enterprise clients, global top 10 logistics companies, the fact that we're on a widely recognised market, our financials are published quarterly. They understand that we're very well audited and there's lots of controls and security in the business. It creates a lot of trust in the B2B marketplace as well. So, that's a really strong thing to say, hey, we're Yojee. Although we're 6 years old, we are a publicly listed company. It brings a lot of strength to the relationship and trust to the relationship that private companies may not be able to expose if they're trying to win those large enterprise deals. And so it's a really good go-to-market angle, as well as a way to build funding when needed.
Indeed. And Hamish, turning to iCar Asia, it's just one of the many ASX listed companies engaged in a very busy M&A period. I know you can't comment on specifics around this, so let me just pose this. Let's assume Qasim's acquisition scheme for iCar Asia closes and your 9-year listing journey on ASX comes to a close in February 22. How has being listed on ASX facilitated both your need for growth capital over the years and provided M&A opportunities, given you've also acquired businesses along the way?
Yeah, in that respect, the ASX has been a great platform for iCar. So since its first listing in 2012, we have used it multiple times, both to acquire the initial businesses that became part of the group, and then to acquire other strategic targets as we look to expand into a new country or to expand our proposition in the existing countries where we operate. So from that respect, the process to raise the capital in order to do those acquisitions or in order to fund further growth, from our perspective, is quite a simple process to follow. And once you've had an established shareholder base and good support in Australia, explaining the story and explaining our business model and the need for the capital for either the growth or the investment, this process became quite a lot simpler from the understanding of some of the other paths to raising capital and not being public. That can be a much more complicated process. So actually taking that step to be listed publicly enabled us to move quite quickly through some of those different processes. So the last business we acquired was at the end of 2019. That process to acquire Carmudi in Indonesia for us went very smoothly, and it was great to be able to execute that in a fast-paced manner. I think the other side, as Ed sort of touched on, is it gives very good confidence to your customers and clients by being listed, because you have to follow those regulatory requirements, reporting requirements, disclosure requirements. That has led to, I guess, good partnerships and long-term partnerships with different parts of the automotive industry for us. But as it also sort of says, it also shows people who are looking at your company, should you become a target of M&A yourself, they can look with confidence at what you've done, how you've reported, and that history that you've had on the ASX. So yeah, we're thrilled about being in a process and look forward to closing it. And yeah, I think that the ASX and the 9 years we've been on it has been a useful part of the journey that iCar has been on.
Yeah, fantastic. And Cecily, just broadly, why should tech companies list on ASX? Very broad question, but sure, far away.
Well, the ASX has a growing focus on the tech sector, and there's been a drive for some time to move away from financial and resource companies to broaden index participation and the investment opportunities for the investment community. And as you mentioned, the All Tech Index was launched in February last year. And companies in the index have already increased from 46 to over 80, including quite a few internationally listed companies. And the market cap of the index has more than doubled in 18 months. So we've got a really active investment community, focused on the tech space, and also an active small to mid cap sector in Australia. Institutional interest generally kicks in over the $100 million market cap in our Aussie market. But it's also important to note that we have a really strong and sophisticated retail investor base here. So it's not just institutional money, but it's a very active retail base. And one of the key reasons companies that I talk to consider ASX as a listing venue is this earlier access to globally recognised indices. So for the All Tech Index here in Australia, it's about 120 mil free float. The ASX 300, it's 500 mil. ASX 200, 1.8 bill versus the Straits Times at 5 bill, or the NASDAQ Q100 at 31 bill. So the significance in the access to the ease of getting access to the indices at a smaller market cap is incredibly important, because it allows you to gain access to international and domestic institutional money. Australia as a market, we definitely punch above our weight. We're a top 5 global pension fund, superannuation market by size, with over 3 trillion in investable funds, and it's expected to more than triple in size over the longer term. And the last thing to note is for companies wanting to raise capital, given the depth and liquidity in our local market, the ease of raising capital, being able to go to market and raise equity in a matter of days. Worked with Elmo, which is a listed SaaS business last year, on a placement, and it's a quick to market transaction compared to if you're private, where it's months going through a private B or series round.
Sasha, I might just add something here, which I think I often forget to add, and I think that is often wrongly assumed, and I might let for Hamish maybe comment on it as well. But the day-to-day running of a public company is not as complex as you may think. I think there's often that fear of, oh, it's a public company, it's really difficult. There's lots of kind of overhead in management and all these things. And I remember being 28, 29 and suddenly waking up as CEO of a public company, and I was quite daunted, obviously, but then you realise that actually if you get a decent board around you, it is quite simple, and it actually allows me much more time to focus on the business than I would in a VC environment, because of what was mentioned by Cecily, that the time to raise money is very quick if your business is hitting the right metrics, and you do a roadshow maybe 1 or 2 weeks, and then you can raise money very quickly, and it's a very different environment. So there's different things to focus on in your day-to-day, but broadly it gives you more bandwidth to focus on the business and just focus on business metrics. So it is much less of an overhead than probably some people might think it is. I don't know if Hamish has the same experience, but has been for me.
Yeah, I certainly think it doesn't hinder the operation of the business, and I think you touched on the exact right things to consider when you're going into that, is having a strong board around you to support with that, and having good processes in place. So where you do have reporting requirements, or whether you do have other requirements, those are things that can be executed without too much disruption to the business overall. We're reporting on a quarterly basis. That is a very smooth process now. We go on a couple of road shows a year to Australia and to Singapore and Hong Kong sometimes. That's a week or a week and a half out of your time twice a year. And then, as you say, the process to raise capital, once you want to do that, if you've had good processes in place to make sure you're communicating your story and communicating the right metrics to people, going to the market to raise that capital becomes a very, very short process indeed.
Yeah, thanks for the insights, guys, and good points there. Now, Cecily, thinking about how to list on ASX and turning to your bread and butter advisory expertise, from a tech perspective, when is the right time to start thinking about an ASX IPO? What are the key considerations, and how do you get started? And when should a company look to approach someone like KPMG to start a conversation?
That's a great question, Sasha. So in terms of timing, there are multiple factors influencing that decision, both business specific and market related. And if you take one message away from today's discussion, it's that early preparation is critical to give you as much optionality around timing as possible. So you need to consider timing with regards to the business performance and outlook. Will your equity story appeal to public market investors at the time of IPO? And this is something that I'll come back to. Then what's required and what time is required for the business to be IPO ready and listing ready. And this looks different for every company, but generally, we start working with companies 12 months out in terms of planning and that preparation for an IPO. And then finally, from a market perspective, there are specific IPO windows each year, generally from March to July, and then September to early December is where we see the IPO activity, with the fourth quarter, the quarter that we're in now, being the most busy for IPO activity. So all these factors influence timing. Coming back to my first point around what public market investors are looking for, and you don't need to be a company that's been operating for 10 years and a billion dollar market cap. Clearly the Australian tech sector is very hungry to support emerging growth tech companies, but you do need to have a proven business model. It's important that you're able to demonstrate a track record of year-on-year top line revenue growth, and also a strong and credible growth outlook. You don't need to be profitable, but having a path to profitability is important, or an ability to show that there is operating leverage in the company as you grow. Size, as I mentioned, is a consideration. Having access to institutional interest, which is generally around a market cap of 100 mil, and that will ensure that you have sufficient liquidity in your shares once you do start trading. And then most importantly, a compelling equity story. So what are investors after? A large addressable TAM, a strong growth. And the number one is experienced management team. The reason investors will back an IPO is that they believe in the management team to deliver on the story that's been communicated to them. The second point around being ready to be listed, do you have a long-term strategic plan and a financial model that's up to date? This is something that will be scrutinised by the brokers and the investors as part of the IPO process. The availability of audited historical financial information, having the appropriate corporate governance framework and board for a listed entity early, Is your corporate structure appropriate for being listed? And importantly, having the appropriate systems and reporting processes and controls in place. So the ability to produce monthly board reports and meet your continuous disclosure obligations. So this is the readiness piece. So how to get started? I wanted to mention the ASX Entrepreneurs Guide. So it's a Startup, Scale Up, IPO for technology companies, and it provides a wealth of knowledge from various members of the investment community about going public. KPMG did contribute a number of chapters to that guide, and I wrote one chapter around what to consider when starting on your IPO journey. The other thing to note, I think it's really useful to talk to members of the investment community who live and breathe IPOs, such as the ASX listing team, your management that have been through the IPO process before, an independent IPO advisor such as myself, or a friendly institutional investor, so that you can learn as much as you can around the IPO process.
Thanks, Cecily, and yeah, no, thank you for the contributions to that Entrepreneurs Guide, and I'll refer to that a little bit later on. Hamish, Ed, did you have anything further to add around that? Hamish?
I might jump in just at one quick, maybe Cecily can touch on around guidance. A lot of people think you may have to provide revenue guidance from point of listing, so I might let Cecily comment on that. Look, obviously, young tech companies still finding their pathway in revenue. You know, you can draw a hockey stick, but do you want to report, and do you think you can meet your 2 or 3 year revenue objectives, and do you have to share that in the journey? So maybe that piece would be useful, knowing that a lot of companies thinking about listing and maybe not yet clear on their 2 and 3 year revenue objectives.
Happy to jump in there. So a lot of companies, when they do come to market, include a forecast in the IPO prospectus, and the length of that forecast does depend on timing of when you list relative to your year end. It's either a 9 or 12 month forecast, and it would include the forecast if you're confident that you have a reasonable basis to do so. But it's also important for investors to understand the growth of their company beyond the forecast period. So while there won't be that disclosed in the prospectus, how are you articulating that, and the breadcrumbs that you're including in the prospectus document? There are circumstances where companies don't include a forecast, but again, it's these breadcrumbs that you need to be able to guide investors to understand the growth prospects. And this is coming back to, okay, is it the addressable market? How is this company going to be successfully grab market share and retain market share? And how rapidly is the business going to grow, so they can form a view on valuation and appetite to invest in the story. And this is where this early preparation piece is critical around your business plan and your financial model, because while you might have different scenarios, but how are you going to craft that story so the financials fit in with the narrative?
Yeah, there's some good examples I can think of. So you've got Updater, who I think listed and never shared any guidance and didn't actually gain much revenue at all. They just shared market share, and that was a really great metric that captured the Australian market. And Altium, who's a $5 or $6 billion listed company on the ASX, which only recently at about $5 or $6 billion market cap started sharing guidance as well. So, but it's all about the strong metrics and people being able to understand where the business is going in some way, shape or form, which can be revenue and can be some really key metrics that you give sort of an objective of how to measure the company's performance and success and capability to pathway to profitability.
The other thing just to add on that is, once you have those metrics, the consistency in reporting becomes very important to your current shareholders or people who are tracking the company as well. So when you're out there on a quarterly basis, providing a similar metrics as you have in the past, to really keep on showing that you're on the path to the story that you've told about the business model, about the TAM, about all of those sort of fundamentals. So that's been some feedback we've had over the past years, and something we try and do in all of our external investor relations reporting.
Very good. With just over 5 minutes to go, just wanted to I guess just head into some concluding comments. So as the world sort of cautiously opens up post the COVID era, we're seeing an almost record amount of activity in IPOs. Just looking for an outlook, I guess, on the tech sector and capital markets for the next 6 to 12 months. And what does that mean for someone considering an IPO, and your best tip? So Ed, I might start with you.
That's a tough one. Look, I think that timing is always important, but if you have the right business in place with the right objectives and right metrics to report on, I think it's hard to pick a good or bad time, because the process does take a while. It's very hard to kind of pick your point of arrival. I think you just have to start the journey when your business is ready, because it is a 12-month period or something similar depending on the company. So look, if you've got the right business and you're doing well, the money's there, then it doesn't matter if it's an upturn or a downturn, you'll be able to keep going. Australian market is very strong in that sense. I think that the Australian market, for the right business models is very favourable, and it marks very harshly on poor business models in down markets. But there's always the capability to grow through any market if you're telling the story right and hitting your metrics that you've shared. And
Hamish?
Yeah, I think the outlook certainly is very strong. So it's probably a good time right now to consider all of those fundamentals that we've been talking about and whether they are appropriately in place. And then you need to start talking to more people. You need to start looking at each of those aspects of your business and looking for where you need to set each of them up for success with the 12-month outlook, if that's your sort of IPO timeline. And yeah, I think the tech sector on the ASX is just getting stronger and stronger. Outside of, I guess, some of the sort of marketplaces that dominated early, and fintech that's looking great now, health tech and data. There's a big appetite for Australian focused or ASX focused funds to put their money into these sorts of businesses and also support them after they've listed. So a great time to start, and let's start today.
Yeah, fantastic. And Cecily, your thoughts?
The current appetite for IPOs is very strong. There's been significant cash that's been paid out to investors, from M&A activity, buybacks, dividends, which is being redeployed back into equities. So we expect the IPO market to remain strong well into next year. From a tech perspective, what I would note is that the tech sector has been the best performing sector. If we look back since the beginning of last year, it's the best performing sector on the ASX. So investors have had a really good experience. And the number of companies coming to market, so you think about how many listed peers they are in the tech space, has grown considerably. And we're seeing a very strong pipeline of tech companies that are looking to list, this year and well into next year.
Yes, we're certainly seeing the very strong momentum flow through to here as well. So thank you, everyone. In wrapping up, I'd like to say a big thank you to our panelists, Ed, Cecily and Hamish. Fantastic insights and experiences into particularly the ASX listing pathway and the momentum as they were describing in the ASX tech sector. Many thanks to you, our audience, for joining us, and Wild Digital for hosting. If you have any questions, I can be contacted via the ASX booth on Hubelo or via email at listed@asx.com.au. ASX contact details and further information, including the very helpful ASX Entrepreneurs guide that Cecily mentioned earlier, and various ASX tech infographics are available on the ASX exhibitor page, also on Hubelo, or at asx.com.au/listings, where you can also find a whole host of information about listing on ASX. So many thanks again, and I'll pass back to Lenora.